Welcome, ladies and gentlemen. My name is Brad Matheny. Today is February 4th, Saturday. I've just gone over 3 videos explaining to you what I believe is going to happen, and I wanted to start with this chart. We're going to delete some of these things and try to explain what is actually happening. Now, I have gone through quite a bit of data on the other videos. Please watch the custom index video this morning. So where we're at in the market is we are nearing the end of a wave 4. This is what I believe is a wave 4 downside correction. I believe it is completed. Okay, I don't believe we're going to get below this low, although this low is critical to understanding Fibonacci price theory, and this high is critical to understanding where we go with the next uptrend. We have to get above this high in order to enter a new bullish trend. We are still in a very early stage bullish trend. I mean, it looks good. The rotational modeling system entered a new bullish trigger. That is a good sign. We are not seeing real solid price confirmation here on the SPY chart. We are not seeing big confirmation in the NASDAQ yet. We are struggling with certain sectors. Real estate, healthcare, chips, semiconductors are all kind of struggling right now, which is why I'm going to tell you I believe we're going to enter a very labored phase, a very difficult, labored price trend over the next 6 to 12 months, possibly leading to a breakout rally near the end of 2023 or an early mid-2024, assuming my analysis at this point in time holds true, which is a moderate bias uptrend will continue and the markets will defend these ultimate low levels down here at roughly 350 on the SPY. If that is the case, then I want you to be keenly aware of the fact that we are going to move into a what I call labored mode. I've counted this cycle trend. I believe we're looking at a peak area just below this ultimate high back over here. So from these lows, we've seen this move up, this move down. I believe we're going to see this move up into this green line area here, maybe stall out for a period of time, then move back down possibly into the 410, 412 area, possibly back down even into this support green area down here. Try to get that included. And then move up into this area, which would be confirmation of an upward cycle trend, having broken above this pink line right here that gives us our trigger. At this point, I believe we're going to be very late in 2023. I don't believe this is going to happen until 2023, and what I believe we would be looking at that point is then another breakdown event, possibly into November, December, January of 2023, 2024, and then a rally phase back up into this area, 460, and that would complete our middle wave C. So we would have A, B, C. Then we would have a pullback possibly back into this area, and then a D wave potentially getting us out. That would become not the end of the wave, ladies and gentlemen. That would just become wave number 1. At which time we would then see a pullback to become wave number 2, possibly back down into this area, must stay above this area and this area. Theoretically, it could go all the way down to this area or lower, but I would like it to stay above this support level here, and then we start wave 3 to the upside. And that's going to be very exciting. That's why I'm telling you, this is the biggest opportunity of your lifetime to really understand what's happening in the market. You need to be aware that the next 10 to 16 months are likely going to be very labored, very difficult for you to try to become an active trader. And I'm going to tell you that's going to blow up a lot of accounts. There's going to be a lot of people out out in the world and in the U.S. who are trying to trade it like it was 2021 all over again. And it's not going to be 2021 all over again. We're not going to see that 2021 type of rally phase until maybe 26, 27, 28. And that's where I think we're going to be rallying up to a peak and trying to stall out. This year, I think we're going to just stay in this consolidated range, maybe getting above 2040, 2045 before the end of the year. And then 2024, we might see some kind of a breakout to the upside, getting to new all-time highs. So be aware. I'm warning you right now. You need to follow my research. If you've been burned, look, I talked to a guy, you know who you are, in Chicago. You called me a couple of days ago. Anyway, made a lot of money in the real estate market. Has been, doing quite well, and has literally got burned by a bunch of people who have been telling him what to do and how to trade and how to become more efficient throughout this market. I'm telling you, if you're with the wrong people, you are going to get burned. You're going to watch the stress level and your account just go sideways or worse. Right now, the smart move is stay cautious, stay protected, hedge against risk factors, and we need to wait to see we get confirmation. Confirmation right now is this pink line. We need to see confirmation in this pink line. Otherwise, we are going to stay range bound. And this is a big range, ladies and gentlemen. You've got a range from 350 up to, where's my pink line? Up to 430. You've got an 85-point range on the SPY, which we could stay range bound within over the next 12 to 16 months. So pay attention. It's not a friendly market right now. Okay, the TT scanner is showing us quite a bit of interesting setups. We have two flat triggers here in cybersecurity and ARKW. These are indicating that we've gotten out of the trade. It has now gotten into flat mode. We have moderately strong thrusting to the upside. We have no new triggers. These are all older triggers. So we're staying very neutral. Mixed bearish. This is the core ETF, the core setup for the ETFs. We've got a bunch of bullish triggers here. We've got a bunch of bearish triggers here. We're really not seeing any great core setups here. We would, in a bullish trend, we'd be looking at a number of new bullish triggers that are setting up here. We're just not getting them on a weekly basis. We are getting more positive thrusting. So notice how these have all turned mostly turned positive. A couple of them are negative, but you can see positive numbers instead of negative numbers. I think this is going to continue to strengthen, but it's probably going to take 60, 90 days to get, some real good trend triggers, maybe longer. The core inverse trigger, it's got a bunch of new triggers. So we've got a short trigger in the S&P. So this is a short of the bear S&P. This is actually a long trigger, HIBS. This is a 3X ETF. Stay very cautious. We do not want to be overly aggressive on 3X ETFs. You can see it's already got a little bit of profit. We got a new trigger here, EPV, ultra short Europe. This is a bear trigger, meaning we're going long the European market. 10.71. We've got a new trigger here, SVXY, the short VIX, betting that the VIX is going to go up. It's up 64. Sorry, it's up 0. There we go. Wrong numbers. So this one is up 16%. This one is up 1%. This one is up 1%. And this one, the semiconductors, SOXS, is this is a short trigger, betting that semiconductors will go up. We're up 18%. This is a long trigger. I was mistaken. This SVXY. So this is a short-term, short VIX. So being long the short VIX means that we are betting that it is going to go down. And the VIX is likely going to be moving downward. And then we have a trigger from 2 weeks ago, JDST, Junior Miners Bear. It's a bear trigger, betting the junior miners will go up. And we are off 15% in that trade right now off the pullback in gold. Okay, so remember, got a lot of bearish triggers here on the inverse. When we're in bearish triggers on the inverse, this is showing us that the market is generally biased to the upside. Okay, so we're getting some decent triggers. You want to try to watch these. Like I said, 5, 6, 7%, you want to try to pull your profits and try to run a trailing stop to protect your trades. The primary TT scanner, and this is the primary list, is really turning bullish. It's building some momentum. We still have a lot of red here on the thrusting pattern. No new triggers. That's telling us that we don't have any reason to go ahead and get overly aggressive on the weekly swing trading basis. And of course, the value has been maintaining pretty much these same stocks up here that have been generating triggers. And these are the value stocks that are starting to accumulate to the upside. So I'm going to zoom in here and drag it over. So we have CVX, Chevron Corporation, long 56 weeks ago. It's up 44% profit. TVR, Travelers Company, long 13 weeks ago, is up 0.46. These are value stocks that should continue to perform as the market recovers. Smuckers has been on and off the list for a while. It's got this trigger now for 10 weeks. It's up 4.37%. Caterpillar has had a trigger now for 8 weeks, it looks like. 6 weeks, it looks like. And is up, too much, 5.93%. And then lastly, we have Principal Financial Group, which has got a new trigger again. This was triggered about 5 weeks ago, and now it's triggering again. Is off 0.16%. We are going to see these move into an upward melt-up kind of a trend. These weekly swing trades can kind of get these triggers where they go off and then they stall and get stopped out or exit. And that's because we're flagging out, folks. Remember, when I came back over here and showed you, we are still in this broad flag formation right now. We're kind of consolidating near a mean, which is why I think it could get very dangerous. You want to try to trade protectively. You want to try to target safe, easy levels. 3, 4, 5, 6% I would think would be a safe target area to pull 40, 50, 60% maybe off on the first target area and let the rest trail. You do not want to get overly aggressive. We are not entering, in my opinion, a big, broad 20% or 40% rally cycle phase, and we won't enter that period until possibly 2024. So right now, stay cautious. Protect your trades. This is really, if you want to be trading, you know, my advice would be to trade small amounts, use a broader weekly swing trading type technology, or go to MENT Live Trades and look for rotational modeling systems on the 2X or foreign ETFs, and really protect your capital. That is the name of the game for 2023, is protect your capital and hedge. Trading will come near the end of 2023 and in 2024 when we have a bigger opportunity to see some real big moves to the upside. And I want to just keep you aware that this is going to be a very difficult year for traders. Unless you're, you know, if you're day trading and you know what you're doing, you could probably still make some pretty good money with this volatility. But as far as swing trading, be cautious. It's going to be little bitty moves with little bitty congestions and consolidation. And that means that you're going to have to be very targeted and tactful as far as how you're trading. Okay, guys, on to the next video. Oh, by the way, please come take a look at MENT.com. I mentioned this earlier. Please come down and take a look at the expert growth plan and the services that I offer. I'm trying to move this into, you know, more of a paid subscription service. The SPY cycle patterns have been nailing the markets. I mean, the value, I've heard from some people, they're making thousands, sometimes dollars a week off my SPY cycle patterns, and I'm asking $55 a month to support me. It's not that hard to figure out that good quality information delivered to you weeks and months in advance is worth paying for. And that's all I'm asking for, is just support me, support my research. The goal of trying to get a couple hundred subscribers for me is not to try to make X amount of dollars, but it's to try to turn this into something that offsets the cost of doing it and maintaining it every month. All right, guys. Thanks a lot. Talk to you soon.